What's going on, everyone? My name is Nicholas Merton here from DataDash, and today is March 15th of 2023. Well, folks, I hope you are having a fantastic day wherever you are, because in today's video, I want to spend some time to play devil's advocate. I want to go ahead and try to share the alternative perspective. What if Bitcoin is in the start of a new bull market, or more specifically, a more extended rally after the capitulation we had back in November with the collapse of FTX? I know over the past couple months, we've been championing the narrative that Bitcoin is in a broader term downtrend. But even while that may be true, or maybe we might be wrong, I want to go ahead and try to provide my thesis as to what may justify a further move for Bitcoin, and more importantly, talk about what's realistic for our price expectations. Is it the start of an entire new bull market, or is this just going to be an extended relief rally? I want to spend some time to talk about that. Consider the same macro data we talk about here on the channel, and we've got a really great sponsored interview with Alex from AngelBlock, where we're not only going to be talking about his fundraising platform, but more specifically, building on some of the conversation points we discussed in today's video. If you guys happen to enjoy it, consider dropping a like. It's one of the best ways you can support the channel and what we do here, and let's go ahead and kick off the rambling. All right. So I want to go ahead and start here by focusing in on price action. Now, even though at the end of the day, we still have not been able, even with yesterday's optimistic price action, a lot of those gains faded, we have not been able to really close substantially above that 200 week and make it support. The price action has still been pretty exciting. I gotta be honest with you guys, as someone who is in cash on the sidelines, I get where the FOMO may be coming in. And I don't want to speak in absolutes, guys. All the while I'm very strong on my opinions here on the channel, this is generally, when it comes to price action between the expanding consistent highs and expanding consistent lows, this is what people would typically define as a bullish megaphone. Or if you're using Elliott wave patterns or just separate labels, it's an expanding triangle, which generally can be seen as a bullish pattern. And while it's not 100% consistent to this technical pattern, it's roughly in line with it. This has given people a lot of cause to be optimistic in regards to price. Not to mention, while market order flow has still remained negative here technically, it's relatively neutral for the week. And that's definitely a positive sign, because for the past couple weeks, couple months, the overwhelming majority of the time, cumulative volume delta or market order flow, generally a measurement of estimating, okay, across the order books on the exchanges, are there more buyers or more sellers? It's generally been negative week after week after week after week, signaling distribution, large whales and investors in Bitcoin selling positions more than people are essentially FOMOing into buying new positions, right? There's always a buyer and seller, but more specifically, we care about that market order flow, because that reactionary pressure is what's going to drive an uptrend or downtrend long term. This is, again, why I highly recommend you guys check out Bookmap. We've got a link down below in the description. It's a really great tool to add to your arsenal. You can use it on these longer term time frames, but you can also use it if you're more of a frequent trader on short term time frames. They have the liquidation tracker, all kinds of different tools. They're constantly adding new features that definitely make it a powerful tool to add to your arsenal. So we've analyzed price action. We've also analyzed the market order flow, and considering the technical price action, things are definitely looking more to the upside right now, getting people very excited. But I want to go ahead and talk a little bit here about a very important dynamic. This is stepping back into the macro, and this is going to help us to come back to Bitcoin and ask whether or not we can really do one of two things, right? The first question I want to talk about is the Fed pivot, right? This is one of the big things that people debate about constantly, and I think it deserves its own focus. And outside of that as well, we've got to talk about the question of, can Bitcoin really start a new bull market? Even if we are to move higher, is it really going to be a sustained upward trend to 100K, to 100K? Some of the numbers you would probably guesstimate would be the next cycle high. All right? That's the general questions, I think. And I think that's pretty fair overall. So let's start with the first question. In the case of a Fed pivot, I know a lot of people were really exuberant about the supposed collapse going on in the banking system, and therefore a good reason for the Fed to pivot. And to be honest, I understand why people are chasing that Fed pivot narrative, because the 2-year yield dropped substantially by about 25%. Essentially, it dropped from a real yield of about 5% down towards 3.8%, the biggest 2 to 3 day drop we've seen in the 2-year yield in bonds across the board for the US, I think in 40, 50 years. Massive move to the downside. And some of the biggest declines in bank stocks we've seen since back in '08, due to a lot of the concerns around regional banks in the United States having a liquidity crunch, having too many locked fixed income assets like mortgage-backed securities, rather than having the ample cash to meet towards depositors who are essentially running on the bank. However, a lot of that has cooled here over the past couple days. And putting aside what's going to happen in that scenario, I want to just go again and talk about this idea. Let's say that as we've seen kind of in a recovery here, even though we've seen yields kind of come back up, let's say on the broader week-to-week trend, month by month, that the US 2-year yield continues to drop and is signaling very clearly before the next FOMC meeting that the Fed is going to pause any rate hikes, and on top of that, they're going to start to cut rates. Right? I think that's the narrative that a lot of people are starting to champion. The betting markets are starting to price this in to a degree. So what if this is the scenario? Well, I want to go ahead and say that while that might justify Bitcoin moving up into the next important price range here, right? We've got the second strong buy signal here, again, kind of counteracting these sell signals on Lux Algo, one of our key indicator suites here. Again, another really important indicator suite that you guys should have in your arsenal. You can get a 30% discount down below in the description. But Lux Algo, again, will let us know here after having multiple signals in one direction, right, starting to outweigh the other counter side, that we could have the momentum to move higher here. So if we don't get another sell signal here, if we can hold up in this range and continue the trend, the next general range to go into is around 30,000 between this pocket at 28K and 32K. The reason that's significant is it's not only really the next major general range of importance for price, but this was the range of prior support in the last bull market. It held up price in January 2021, it held price through May to July of 2021, and it was also where we broke the camel's back, essentially, where price action snapped and confirmed a full-scale long-term bear market. This is, again, where we realized that we were no longer in a bull market. This was such a significant price range. And for us to actually kick off another bull market, or even just continue in price, this would be the next range to go to. Now, I want to go ahead and talk about the secondary question here, and that's whether or not we will be able to really kick off the next bull market. And as you all might know very well, what I mean by that is a new bull market would be something where, again, we're going towards 100, 200K, new all-time highs, really have a 3 to 4 year cycle, essentially, right? One of those typical bull markets we've seen with nice percentage returns. Well, I have to tell you guys, I genuinely think that if anything, we've got an opportunity to come to this channel and we're going to chop for a while, start to deviate, and roll right back down. Again, still calling here that there's a chance for us to move higher, but in the long term, I will say with confidence here, even if I'm trying to play devil's advocate, that there's not a framework to kick off the next bull run if you're betting on this Fed pivot. And the reason why, and this is a big unknown fact, because so many people started investing in 2020, and they saw during a period of time where the Fed was printing a lot of money that there was a direct correlation in equity prices moving higher after the COVID collapse. Well, history tells us that the vast majority of pivots, when the Fed actually starts cutting rates and the underlying cost of capital, that is when the vast majority of declines actually kick in. It is not when the Federal Reserve that is pivoting that equities start surging higher. The Fed is pivoting only because there is something broken in the economy, and that is going to lead towards an earnings recession and therefore a depression or a recession in equity valuations or asset prices as a whole, including crypto most likely. Now, I understand there is something, again, that I do want to talk about, a third kind of point here that we'll get into as we go through the video. But generally speaking, if Bitcoin continues to trade in correlation with equities, which it has continued to do over the past couple of months, then we need to understand that wherever equities are going to go, especially if they're going to the downside, crypto will likely go with it until that correlation is broken. Now, again, Taking a look here at Lux Algo here on that monthly time frame. This is where, again, Lux Algo can be very powerful in helping to determine the broader trends. It gave us the sell side signal back in April of 2022. This is where a lot of the smart investors I know realized that the game was up, that it was time to start getting bearish, and that we were in a macro downtrend after a secular bull run over the last decade or more. However, if we take a look here, we have still not gotten any buy-side indicators on Lux Algo. We had that here, for example, back in June of 2020, which allowed us to capture the majority of that rally during 2020 through 2022. And on top of that as well, other types of good buy the dip periods followed by sell side metrics later on. So again, this indicator here on those significant time frames, the monthly time frame, is not telling us that it's time to go long yet, right? So again, I'm just trying to kind of keep you guys at bay here. For those of you who are more leaning bullish, who are feeling the FOMO, just keep that in mind here, that if equities are going to continue dragging lower, it will act as a magnet. And maybe Bitcoin has this period of, again, going up towards 30K, right? With the momentum we've got now going from 19K to 26K just the other day, it's not too crazy to think that it could possibly move a bit higher. But at the same time, I think many of you are like me. You are here wondering whether or not we're in the next bull market. And I don't see that sustained momentum just yet. Again, we just have to keep neutral here. And some of these tools, whether it be Bookmap or Lux Algo, they're going to give you that kind of cutting edge advantage in understanding whether or not the markets really have the foundation alongside price action, alongside the fundamentals to actually sustain another bull market. Each and every time, those are the things that have lined up with every single bull market in crypto. We have the fundamental supply and demand imbalance where there's a lack of supply and excess demand, which drives up price. That's usually driven by the halving events, but we're not going to have so many of these things coming into play. The halving event isn't going to have the same effect that it's had over the last couple cycles. It's not as strong because of the fact that it has a lesser effect versus the broader supply and demand of just buyers and sellers. The halving effect has a waning effect over time. So we need some other kind of catalyst. But now we've got regulators potentially censoring on-ramps such as stable coins after what's been going on, and all types of different things such as the lack of banking relationships due to Signature Bank, Silvergate, and SVB all getting shut down. What are going to be the on-ramps into the crypto space? These are the kind of concerns we have to be thinking about realistically, guys. And this is where the macro scenario really comes in. Now, I want to go ahead and just kind of say one other thing here as well, is that why I think this is just kind of mere relief rally and why we may continue into 30K is looking at the kind of Wall Street premium on names like MicroStrategy and Coinbase. These stocks are not trading up with Bitcoin's price, right? Maybe they're moving up in dollar terms, sure. But ever since back in August, MicroStrategy has been continuing to trade at a weaker premium, setting in lower highs and lower lows against Bitcoin. That is not a good sign. And I'd much rather look whether Bitcoin's at a higher price or, for example, if, generally prices capitulate, I would much rather buy some of these names at a discount on their ratios, like MicroStrategy or Coinbase. Gotta tell you guys, these have been in general downtrends for a long period of time, and it tells me that the amount of buy-side pressure is not there to meet the excess amount of supply and investment opportunities, right? People are not paying the same kind of premiums they were paying during the optimistic periods of the past. And until we can start breaking through some of these descending channels, which again are easier to break through over time as the resistance is moving lower, I'm not too euphoric yet. My buy-side signals are not signaling it. We are seeing here as well that the overall 2-year yield has popped up a bit. Now that the Fed has contained this scenario, perhaps inflation is back in the picture and we've got to continue correcting it. All right? I wouldn't move so soon on anything. And I understand we need to get towards the third final topic here before we dive into our interview, and that is whether or not Bitcoin can finally be that risk-off hedge against the broader asset markets. And I would say look no further than BTC to IXIC or the NASDAQ. Now, we did get a very, very nice move here over the past couple days, starting to actually move up and set its highest price range since back in June. This, to me, is one of the scenarios that I actually care about. And that is whether or not Bitcoin can really start to finally break away from equities. What I would look for here, what I really want to see, is us reclaim somewhere in this pocket range here where we were back in July. Again, as we've talked about, this was a very significant range. When we broke this here, it was very clear that we were in a further long-term downtrend. I would love to see continued higher lows and higher highs here, right? We have gotten into this pattern where it looks like we might be establishing our first higher low, right? That's really great to see. And this is what, if anything, has me a little bit on the edge, feeling the FOMO, having Bitcoin potentially play out like gold did back during the 70s, during a wave of inflation, and therefore uncertainty in the monetary system, a lack of trust in government bonds and currency and the value of money. That's what makes me really excited. A lack of trust in the banking system is what potentially could build a bullish case for Bitcoin. Trust me, guys, I know I sometimes sound like a broken record being bearish on things, but I do understand that there is that 10-20% chance. We wrote about it in the Dash report nearly a year ago following the comments from Stanley Druckenmiller. He talked about this potential crypto renaissance, and I'm definitely aware of that. But I need to see a bit more price confirmation. I need to see a bit more optimism here. If we continue to see that and we can hold in that range, if we can see that the trend is strong, I'll happily pay a slight premium on Bitcoin. But the more we see these kind of fades like we saw last night, where a lot of those gains fade out when we get in towards the typical range of resistance, right? This typical range where Bitcoin for the past couple months since back in June has not lived and usually collapses back down. It's not enough for me to feel enough FOMO to really get in. And again, guys, we've talked about you can dollar cost average, you can do all that good stuff, but I recommend dollar cost average and more heavily into capitulation and not chasing rallies or bump ups in price. Trust me, guys, you won't likely miss the rally. You won't miss the vast majority of the bull market. So long as you're dollar cost averaging or you're buying into those capitulatory events, averaging it over time. Anyways, guys, let's go ahead and dive into this interview with Alex from AngelBlock. If you enjoyed the core part of this video, drop a like, and let's go ahead and kick off the conversation. Alrighty, everyone. So in today's sponsored interview, I'm sitting down with a longtime friend of ours and one of our long-term partners here on the DataDash channel. Today, I'm talking with no other than Alex, who's the founder of AngelBlock, who's looking to revolutionize the way crypto projects raise capital and really set a whole new wave of standards that have been well overdue in the crypto space to give us more quality projects and better checks and balances. So, Alex, thank you so much, man, for making the time. It's good to have you here.
Thanks for having me, Nick. Appreciate it.
Awesome. We got a lot of things to talk about. I want to spend some time to kind of give people who may not know the quick rundown on AngelBlock, but more importantly, talk about where you guys are at right now, because it's a really interesting time in the market. People are starting to get those kind of bull market feelings. People are interested to see, I think, the space generally kind of improve and learn from a lot of the lessons in 2020 and 2021. And also, I know you guys just recently launched the token. You guys did a really fair launch, which I'm a big fan of as well. So we got a lot of things to chat about. But I just first wanted to kind of give people the quick rundown. So for those who maybe heard about AngelBlock or maybe don't know anything about the project yet, what is it that AngelBlock really is, and what problem are you guys trying to solve?
Sure. So what AngelBlock is at its very core is a non-custodial protocol that's focused on cleaning up some of the messes that we've seen in recent years regarding fundraising in crypto, right? And why crypto specifically? Because we want to focus on token-based raises because we see those as the most problematic right now. And to be honest, I think that if we don't clean up the fundraising aspect, like that's why I've spent the last, almost 2.5 years doing this. I really think that we can't go forward as an industry. I think we will be under even more regulatory scrutiny. And, Nick, we've done one of these interviews many, many, many years ago when I was still, part of running a centralized exchange. And I think I even said this then, that if we don't do our part to regulate ourselves, then we deserve all of the horrible regulation that's going to come our way. Mm-hmm. And I think that at its core, AngelBlock is a way of trying to regulate using technology, regulate the fundraising space, right? And to make it a bit better. So our goal at the end of the day is basically, if you look at fundraising, if you allow me to rant for a second here, if you look at fundraising, and if you look at fundraising in crypto, it hasn't changed. Like fundraising has, like, if you look at Web 2, because now we're, in the Web 2, Web 3, like it's not even crypto anymore, it's Web 3 because it's gotta sound a bit cooler. But it, like, we haven't really, like, fundraising in crypto hasn't changed since, it's the same stuff that's been going on in like 2005, right? And a lot of these deals, they get done, on email or face to face. And you don't really know the other person. Is he going to wire funds? Like, who has the tokens? Did the team generate everything? Is the team dumping because they don't have, vested contracts done? Like, it's just so fragmented. Everyone has a different standard. And then you have another problematic piece, which is like launchpads. How do you get this token out to a large group of people, right? Because you might do a private sale because, hey, there's, jurisdictional issues. There's, where are you domiciled? You have those kinds of regulations going on. And you might have to do a private sale, but then you can't really launch a market with 20 market participants, right?
Yeah.
And if you do a private sale focused on VCs, you're probably going to have like 20 to 25 market participants. You can't do that. So again, how do you decentralize the holding of this digital asset? And that's when, a lot of these people, they go down the route of, maybe we'll use a launchpad, and then, and that's when a lot of these other issues start, right? Because launchpads are these centralized black boxes. You don't really know what's going on. I actually did a lot of research, and I'm more than happy to talk about it with you. Maybe not today, but I can just give a quick rundown. I did a lot of research. I talked to a lot of launchpads to learn as much as I can, because I do see them as competition. But, they're around for more or less every bull cycle. They close down pretty quickly. I've heard from a friend who also had talked with a lot of these launchpads, talked to their founders, and a lot of them have this approach of, we want to pull out as much money as we can in this market because we know we're only here for this bull run, right? Like, you can't build a business knowing that you're only going to be here for a bull run. One of the conversations I had with a launchpad was, they basically told me, like, if you lower your initial market cap to $200,000, that's when we really see these crazy pumps going. It's like, but
it's the same kind of childish stuff that's been going on since 2017. And like, for those, I know some of you have been watching the channel. We still have people who've been watching us since 2017, which is awesome. But there's also some people who just came in the last bull market. And the crazy thing is that while there was some differences, there's different narratives and trends and innovation, the same exact stuff happened. It just came through different formats. It's the same kind of absurdity, exactly as you mentioned, Alex. Like, I think I see two overarching issues. A lack of, like, standards, as you mentioned, which are, like, as you mentioned, like with big raises in the space, like Aptos, people were like, hey, what's the vesting for the token schedule? Like, who are the actors or players who are investing on the cap table? What are the goals of this project? Like, what's the eventual revenue or long-term goal ambitions of the project to inevitably reach in the next 3 or 5 years if everything is successful? The kind of stuff that is, like, standard and commonplace in a traditional equity raise or any other type of venture capital. But in crypto, it's just completely, because I think we expect, because it's decentralized, it could just be scattered and it can be kind of free form. And that's not how crypto is going to survive long term. And what makes matters even worse is, because of this lack of standards, you've got a secondary effect, which is that it is allowed and normalized billions of dollars to be stolen every year through rug pulls, billions of dollars to be stolen through hacks because of people using unsecure smart contracts and technologies. And you've got billions of dollars that may be even going to the projects in the space who have these ambitious goals that may last for more than a year, but they're just the slow rug. They keep saying they're doing stuff, but they don't actually have real meetable goals. They fall
99% of NFT projects.
Yeah, exactly. Right. It's like,
unfortunately,
NFTs, even ERC20 projects, like it got way out of hand. And what went on in 2021, exactly as you said, Alex, it can't happen again. And billions of dollars of liquidity got absorbed into practically scams or mismanaged projects. And I think what you guys are doing is so fascinating. So just to give a quick rundown for those who may not know about AngelBlock, one point that I think is really important to build on what Alex mentioned about building this kind of protocol for capital raising is essentially focusing on utilizing not just really interesting governance processes in order to make sure that there's actual participation from the investors and key community members. But the biggest thing you guys implement that has been talked about in the crypto space for so long, but no one has actually deployed this. I have yet to see one project other than you guys, and that is the aspect of tranches. And this
Yep.
idea that, let's say, for example, let's say, Alex, you and I wanted to raise a Series A round for a project. We want to raise $10 million for some crypto protocol. We've got some ambitious idea and we want to take it to market. We've got the team, we've got the white paper, everything laid out in a roadmap. What we have to actually do in order to access all of that capital, first off, we're only going to probably get $2 million because that's what we've requested initially to have so we can get off our feet, start building things. After that, we have actual definitive trends we have to meet or certain types of steps we have to complete before we get the next 2 million and the next 2 million and the next 2 million. And not only is this divided out over time and only being given out to the actual teams by meeting certain goals, but the big point here is that the community, and more specifically the investors in the protocol, whether it be everyday retail investors or credit investors, they're making the decision. And I think that's so beautiful, Alex. I mean, you've seen this well before this bear market that we went through. You've been working on this for the last 3 years or more. And you know that this is a prominent issue, not only like access to participation, which is what I think launchpads initially were focused on trying to fix, but they fell victim to the same problems: lack of transparency, low quality projects, no actual request to meet
And to be
delivery
honest,
of things.
greed.
Yeah, greed.
Yeah.
Yeah. At the end of the day, it's greed.
That's a big one in this space.
Yeah. It's a very big
Yeah.
problem. So
So
anyways,
if I can touch upon exactly what you said, like, because I can give some clarity to this, because I it's a double-edged sword, because I've actually talked with a bunch of startups that were they were very scared of the tranches, just because, like, we don't fit any specific crypto narrative. Like, we call ourselves a DeFi protocol because we're exactly that. We're a DeFi protocol. But a lot of times when you say DeFi, people are like, oh, I know DeFi. It's like lending, right? It's over collateralized lending, because that's like what 90% of DeFi has been over the last, 3 years, essentially. But when it comes to these tranches, what's super important to understand is this is the first time that capital that's raised is being transparently held in a smart contract, right?
exactly.
There is you are not the receiver of these funds until you meet specific criteria. And I think that's what's really, really important. And I've been even toying with this idea of maybe creating some kind of platform adjacent to AngelBlock that would essentially it would simply serve as like a proof of raise kind of thing, like, because it's what you mentioned, like, people raise and they're like, but did you actually raise? We have companies that raise $10 million who are no longer solvent 6 months later in this space, which is just insane. Like, how does that happen, right? And when it comes to these tranches, like, all this capital, when it is being raised, it is held in the smart contract. All of our smart contracts have been audited. We have they're highly customizable. We have they essentially do many different things. So it's not just the capital raise, but it's also the token distribution and the token vesting. Everything is governed by smart contracts, because one of these issues that we see is also, okay, you raised $10 million, but how are you generating the token? Because a lot of times what these teams do is they just generate all this token. They hold it on a ledger or a Trezor, and they follow some kind of vesting schedule, right? And how do you govern against a bad actor or a rug pull then, when you have a $50 million fully diluted market valuation and you have access to 60% of it on your Trezor? Like, how does that work, right? So there's a lot of different issues here. We are exploring another way of doing tranches as well, because, as you mentioned, right now they are milestone based. And what we want to do is we want to make it simple. We don't want to penalize investors. We don't want to penalize startups. We don't want this to be more work. We want this to be cheaper. We want it to be faster, and we want it to be safer and more transparent. Those have been our goals, right? And that's exactly the mindset that we have implementing all of this technology. So we have super simple milestones that we agree upon with the startup. It can be, I don't know, like actually conducting the token generation event, launching the beta version of your protocol or your DAO or what have you. Things that you can, as an investor, I can go online and I can actually see. And what's super important here is when you invest, and I think some even startups don't really understand this, because I've had to talk with a few of them that ask me questions. But what if an investor changes his mind? No, that's not how the protocol works. If you invest, you invest. You can't. If I invested, I did a few deals recently. I can't really, change my mind after 6 months and be like, you know what, I just want my money back. Like that's
Yeah.
not really how it works, right? So that would actually be breaking the terms of service. It would be actually you would be penalized as a bad actor if you tried to do anything like that in the protocol itself. So the only way, the only reason really we implemented these milestones and these tranches is to make sure that the startup is delivering, right?
Hmm.
It's not, oh, the investor had a change of heart and now we're reverting something from the smart contract. But let's look at it from the other perspective that the startup, as it happens, unfortunately, in this space, they turn out to be a bad actor, right? Whether it's a rug pull, whether it's an exit scam, whether it's, as you mentioned, a slow rug, right? That's when this tranche mechanism comes into play. Because if you start deleting your socials and you stop posting any updates and no one has heard of you in 6 months, like chances are you're trying to
Yeah.
rug, right?
And the best thing
And
you can do
that's
is prevent them from getting those millions of dollars. In our example, we used
exactly,
at least 80%, 90% of that liquidity,
exactly.
not getting absorbed by some scammer. Exactly.
That actually it leads to an additional vote on chain, on protocol. And what we're able to do is if we decide, we also have a validator system that basically makes sure the protocol functions the way it's supposed to. So it's not just community members that have 100%, decisiveness when it comes to this stuff. This is a model we implemented just to make sure that the protocol is functioning the way it's supposed to. We know who the good actors are and they're doing their job. That's why this validator system is going to be very, very important going forward. But basically, if only one tranche of money has been paid out and the startup turns out to be a bad actor, the smart contract we can go through a vote and we can actually revert back 80% of that capital back to the original contributors.
Yeah.
So obviously just because of how fundraising works, how crypto works, like we can't guarantee 100% because, like some money is going to be paid out because the startup has salary, they have a burn rate, right? That's
This
just
is,
how it works. But,
yeah.
we can still protect capital because right now it's binary. You either invest and you make some money, or someone rugs and you lose all your money. There's no in between. And if I can safely get, 60, 70, 80, 90% of my capital back from a failed investment, because someone tried to rug me, they tried to exit scam, like I'm taking that deal like any day of the week.
To that point though, X, what I think, like, again, to visualize it for people, I think about traditional venture capital right here, kind of this neutral space. You guys not only bring the transparency and the standards that I think put on par with the traditional equity-based investing experience, but you guys take it up a notch by implementing this tranching feature. I mean, I'm not saying that no one else has done that in venture capital before, but really, this is setting a high standard where not only are we going to have better quality projects, but there's going to be real deliverables, and it's going to prevent
Absolutely.
so much of that liquidity that people are investing in, that many people worked hard on over the last decade during this secular bull run. To hopefully not lose that all in one bad bet, to be
Yes.
able to get some of that back. Taking a 20% haircut is better than losing everything. So,
But to your point about that model being implemented on the equity VC side, right? It's the same thing with banks and with Aave. Aave can use the same infrastructure that they developed over the last few years. The protocol does not care whether you are processing $300 billion or $300. It's going to work the same way, right? Obviously, some percentages are going to change, like your yield's going to change, things of that nature. But the same thing on the VC side. Like what we're doing is our goal is to create a new kind of infrastructure that can hold and host these kinds of raises with checks and balances in a highly automated and efficient fashion, right?
Yeah.
So think about it this way, that, okay, there are some VCs that do this, but can they do this at scale? Right?
Yeah.
Because we want to be able to do this at scale. We want to set a standard for raising funds in crypto. Like our goal really is for this protocol to be the go-to way of fundraising within crypto. And some VCs do it, sure. But how many deals can they process, right?
Right.
You can, if you're a prominent VC, like what are you doing? Like, I don't know, like 20 deals per year, maybe, like depending on your size, right? But we're talking about being able to protect potentially, hundreds of billions of dollars.
Yeah. No, I think it's, again, Alex, like this is as you mentioned earlier, unless we have something like this, crypto won't have crypto
Mm.
can have maybe some relief rally or some kind of bump up. And that's something I actually want to kind of get into your thoughts on the market. But I think honestly, until we have these new standards, if these are not the standards, whether it's you guys or another project, like crypto will not thrive in the long term. And as you mentioned, it will just
Yeah.
give more fuel to the fire for regulators to step in and do what they did on projects like Tornado Cash, all this stuff where they just blatantly step in and block crypto innovation. For people who are genuinely trying to build something. I wanted to go ahead and talk a little bit though, Alex, about like not only getting your thoughts on kind of the current state of the market, but right now you guys also launched the Thol token. This is the kind of utility slash governance token that you guys have built for the overall AngelBlock platform. I'm curious, how has the launch gone? Are there any things that you're really happy about on top of that as well, like in regards to where you guys are at with the protocol? And just isn't this kind of the perfect timing for AngelBlock, like as a project, considering the market conditions,
Yeah.
people now looking for more transparency and trust than ever?
Yeah, that's a really great point, and I really think the narrative has shifted to our benefit somewhere midpoint of last year, because like we've been preaching, for a really long time that non-custodial is the way to go, right? And what happens last year? You have Block 5 Voyager, Celsius blow up, and those are the black boxes we talked about, right? Like I'm
Yeah.
sending my money somewhere, I have no idea if I'm getting it back. Like if everything is green, people are making money, everyone's happy. But when things turn, they start going south and people can't withdraw, that's when you really understand that, maybe next time I'll use a DEX instead of centralized exchange, right? Maybe
Yeah.
I'll be using some of these non-custodial ways of doing things, since crypto allows us to do this, right? Like before the tech was available, like we just did what we could do. But now we have Uniswap, we have SushiSwap, we have, a lot of these other chains that are doing a lot of great work, that have, DEXs and lending pools and everything in between. So I think we're just trying to, we're constantly trying to explain where we fit into the larger crypto narrative, because no one's done anything like this before. And it might sound, like we're bragging, but it's actually quite the opposite. It's a lot of work because people have zero, like they have no point of reference. They have no
Yeah.
framework about what a non-custodial fundraising protocol is supposed to look like, right? So
Yeah.
that's one of the hard things, actually. But I think the market is playing to our benefit in many ways. Like what happened, with Silicon Valley Bank, right? Like, okay, so you raise funds, and then how do you know that a lot of these startups that raised recently didn't have their money there, right? Because a lot of these, even token sales, they get converted to fiat and they're held in a bank, right? I would love to know, because we don't have access to this information yet, how many deals, because 50% of the US VC ecosystem uses Silicon Valley Bank, right?
Right.
How many deals have been pulled off the table in the last week because of what happened?
Yeah.
Because
I would bet a
there are
huge
some,
amount. Yeah.
a huge amount, right?
Yeah.
Like there's just a lot of these small things that have been compounding over the last, year and a half, that have really showed a clear way for us to go forward in crypto. And the things that we have been doing in the past are just simply not enough, right?
Yeah.
And it's heartbreaking to see. But we had, Signature, Silvergate, and SVB, huge problems there. So a lot of the crypto-friendly US banking side has just gone
Shut down
underwater.
overnight. Yeah.
Yeah, so that's incredibly problematic. But I'm very bullish on. I have been bullish. Like we discuss a lot. Like you have a lot of bearish sentiment. You're bullish on crypto long term, right?
Right.
But
Right.
just yeah. So we both are. But I'm usually like the perma bull, and you're always the one that kind of like holds me back. Like I don't know, macro's not looking good, right?
Yeah.
But I'm on a long enough time horizon. Like I'm just so bullish on crypto, and I love this space. Can't imagine doing anything else with my time and my life right now. And I just really hope that we learn our lessons this time. God damn it, because we just have such a short, like, we don't remember stuff. We get so angry at the next influencer for dumping the token, and then we start
Yeah.
looking at his trading calls the next week, right? And the same thing happens with the VC landscape. The same thing happens with almost anything in this space. And I think it's just this. We've reached this point where, like, I really hope we don't forget everything that happened. Just because the markets turned green doesn't mean we don't have a ton of issues that we need to fix in this space.
I think the way I think about it, Alex, is like when you're trying to found a startup or you're trying to build a new habit, like I want to get into running every day. So many people quickly jump into going 110% on something and they don't sit back and think, okay, how am I actually going to do this? Like if I really want to make this a daily habit, or I want to go out and found some really exciting project, how do I actually go about raising capital? And I know that people are telling me this is how it should be done, but maybe there's a better way. Maybe I'll take a bit more time. And I think it's the same issue. It's like tech startups, they build something really rapidly, run into a ton of technical debt, and they get caught behind. And that's the same kind of like mentality that unfortunately I think crypto's been in. Is it's always, once things start moving, it's like, hey man, we don't have any time. We got to chase the big narrative. We got to go
But that's what happened with our token launch. I can do a full circle on this because that's exactly what happened with our token launch. Like some new people came into our community, and I can talk about the specifics real quick in a second. But we basically, just because we launched on Uniswap, just because we thought that was the best way to do it, we had a lot of people that came in with this. We could tell what their background was, essentially, is what I'm getting at. Like, we've been building this for 2.5 years, right? And we will be building this for the foreseeable future, right? So we don't really have a lot of, we don't have strong emotions regarding what the price should be, like the minute of launch, because that's not, 100% of what we've built. That's a small portion of what we built, right? The token and its use cases. Like, everything that AngelBlock is way more far reaching. Obviously the token is very, very important for what we've built, but what the price is going to be 5 minutes from now it's not the be all end all, essentially. And we had some people that came in and they were like, why didn't the token do a 20x? It's like, my friend, the token is currently, it has like a $5 million market cap with a fully diluted of like 30. It's like, this is not plastic bottle Puma shoe Inu, version 2. Like, it's we didn't start this with $10,000 of liquidity and it's just going to moon 200% in the span of 30 seconds. Like, this is not what we're building. And we even, like, to this day, we have people coming in and we have like, what's the sales tax? It's like, excuse me? Like, there's no tax on this, right? Yeah, so like, you can tell that there's just some people who don't really, all they see is shiny new token, because like we have been going up like a tiny bit in recent days, but they see shiny new token and they don't know what's being built behind it, because right now you can just launch an ERC20. Like, I can launch 3 during this call and have them trading on Uniswap in the span of 2 minutes. So it's a very strange thing. But what we did is, I'm very grateful to my entire team. Like, we're getting close to 30 people. I think it is, we're at 23, 24 full-time. And the rest we have moderators, some part-time moderators. We have this ambassador program that has been working wonderfully for us. But like, we're getting close to 30 people, and it's been quite a ride. And everyone is amazingly talented and bright and just believes in what we're doing. But our engineering team really knocked this one out of the park, because we were able to protect our entire community from front-running bots, right? Which is a very big problem when you're launching on Uniswap. So we basically, like, long story short, we initialized 2 pools. One was to trap liquidity from front-running bots. We communicated to our community that we will be starting at 4 p.m. CET or 4 p.m. UTC. I don't even remember. It was back in midpoint of February. And we just asked everyone, please patiently wait until we start, because we just trapped something like $400,000 worth of liquidity from front running bots, and then we just switched pools, right? We initialized the second pool, and we've been reintroducing this trapped liquidity slowly but surely into the main pool over the last month. We've already had a lot of these front running bots exit at lower price points, because if anybody listening doesn't know how this works, is basically front running bots, they try to the minute they see liquidity in a new contract, they start buying it up. Then you have
they wait for others to essentially buy it as well, which drives it.
exactly.
Because an AMM is basically automated market makers like Uniswap. They're just moving on basically like a pendulum or curve, essentially.
Yeah.
So if people are coming in, they buy up a lot of the tokens. They wait to see, oh, a couple buyers come in, then they sell it. Net fees and the actual network fees you have to pay and stuff, they make a small profit and stuff. But what's nice is that you guys basically trapped them and stuff, so that's good.
Yeah, we trapped them. You know, obviously the price went up to like 30 cents, came down to like 14, because you're still going to have some effect of these front running bots. They still bought tokens that they want to exit, because they don't care what you're doing at the end of the day. They just want to essentially screw everyone over and make a profit, right? So it looks like the majority of them left, which is great. And we're still more or less in that price range. But, you know, we've been just basically waiting for them to get out, and we're more or less there. So, you know, this is where the community takes over. This is where additional listings happen. So I'm very excited about this. And, you know, we've had a lot of great support from our community. I really feel very, very strongly about our community. It's growing steadily, but the quality of people, and I know you and I, we discussed this, that you jump into Telegram or Discord from time to time, and you just see that there's people that are actually engaged, that are asking questions, and
it's incredible, man. Really, like, guys, if you need one thing, one thing I forgot to mention is, well, I guess I talked about it earlier, is that Alex is one of the few people that I really wanted to work with as an ambassador. And for this idea, I think it's one of the most noble that's being built right now in the space. It's practical and it's needed. Of course, man. I think you guys have built a really good project. And I think the biggest thing that tells me that I'm kind of onto something here, like I'm always kind of curious as to whether or not I've got my eye on the prize for like good projects, is what you see going on in the Telegram group. And being in crypto for the past couple of years, I know the difference between, you know, Telegram groups that just, you know, bought their communities essentially, and those who have real communities who are passionate.
The walls of high, and good project. 300 messages going down.
I mean, seriously, the Telegram group, everyone's got AngelBlock NFTs. You guys have such a great community that's, I think, passionate about this idea, like we are right now. And I think, again, that's one of the greatest places you guys can start, is checking out the Telegram. I'll leave it linked down below in the description. But I'm curious, Alex, like, to kind of give people who may be interested kind of guide on where they can learn more about what you guys are doing. What's the best place people could go to learn more about AngelBlock?
Absolutely. You can, there's a lot of documentation on angelblock.io. You can look through our Gitbook, which is updated pretty regularly at this point. It has a pretty good overview of basically where we are right now, what we're trying to achieve, and what a lot of the technical implementations for this protocol are. Please join us on Telegram, Discord, you know, whichever you prefer, and on Twitter. We're very active across all three. Someone from the team and from the community is always on Discord or Telegram, and you can ask absolutely any questions that you may have. So we're a pretty fun bunch. We do a lot of giveaways as well. We have a lot of merch. We have a lot of NFTs, and we give away 1 NFT minimum per month. We basically like to reward our most active, but also just genuine and helpful community members. So we have this thing that we do. It's called Community Member of the Month, and we basically just sit down with a lot of the moderators and Nikos, our head of community, and some of the marketing team, and we basically say, who do we want to recognize this month, right? We started this at the beginning of this year, and there's always one community member each month that was just went above and beyond, just being genuinely nice, helpful, informative,
onboarding new people,
and just like being this connector between the team and new community members, and just sparking conversation. And like I love to see it. You know, we just have, just off the top of my head, we have so many great community members that, you know, like I go on our Telegram sometimes, and like I feel like they're working for, like, with AngelBlock, right? Like they're almost like team members, because they know so much and they're so helpful to others. It's great to see.
Yeah. Well, Matt, I remember back on the podcast episode we talked a lot about, you know, not only the current state of the market and what needs to get fixed, but I think as well what you guys have built in regards to your community. And I think, dude, it's the right project for the right time. You guys have built something really nice. I'm excited to see, more importantly, what kind of deal flow you guys are having. I know that you guys have been doing a lot of great business development with Alex Zero and a lot of different projects and ecosystem. I know there will be some announcements hopefully in the future to talk about on that end that are currently in the works, which we can't talk about now. But I just want to say, Alex, thank you so much, man, for making the time. If you guys are interested as well, I'll leave any relevant links down below in the description, the docs Alex referenced, and some of the other resources. But man, as always, it's so good to get to chat with one of my long-term friends. Thank you, Alex, for making the time, and really excited to see what you guys have coming down the pipeline and stuff for AngelBlock.
Thanks so much, man. Nick, as always, you're the best. And I love you. I love this channel. I've been a fan, since day one. And I'm just very happy I can call you one of my close friends. And thanks for having me on. I really appreciate it. And I think your community is great. It's a different kind of community, but I really think you have one of the best communities in crypto. And good job not showing them any BitBoy scams and doing any pumps and dumps. Like, it's just informative and people are actually learning. And one of the few YouTube videos I can actually go and scroll the comments because people actually have something to say rather than, here's my Binance referral link or something else.
Thank you very much, man. I appreciate it, Alex. I mean, it's been a crazy wild ride over the past couple of years, but I hope to keep being in it during bull and bear markets, man. Try to do as best as I can to cover the macro side. And I can't wait to see in the next bull market, man, when we start to realize what AngelBlock's capable of. I think that it's going to be a whole new filter for the space that's going to allow us to finally start getting a real vision for what crypto is going to bring. So I can't wait to see it, man. Interesting times ahead. And like I said, man, thank you for making the time, Alex. It was a pleasure.
Thanks so much, Nick.